Trading stocks, options on stocks, futures, options on futures, and retail off exchange foreign currency transactions, Forex, involves substantial risk of loss and is not suitable for all investors. Past performance, whether actual or indicated by historical tests of strategies, is no guarantee of future performance or success. There is a possibility that you may sustain a loss equal to or greater than your entire investment, regardless of which asset class you trade, equities, options, futures, or Forex. Therefore, you should not invest or risk money that you cannot afford to lose. Trade Guide Limited is an authorized representative of Forex Max Limited and regulated by the Financial Conduct Authority number 229906. G'day folks, this is Danny Younes from Supercharge Wyckoff VSA.com. I'm the author of Supercharge Your Trading and Investment Account using Wyckoff Volume Spread Analysis. Now, in this video today, what I'm going to do is just go through and analyze what's happened with the Aussie dollar versus the US dollar, and just take you through and looking at some bars and what they mean and what will possibly occur in the markets moving forward. Okay, so let's have a look. I've got the 30-minute chart of the Aussie. All right, and we can see right here we have a widespread up bar. Now this is a very widespread up bar on massive volume, ultra high volume. Now this would have been the FOMC minutes that came out the day before. Okay, so whenever we see a widespread up bar with ultra high volume, you can see that is Yao Ming. All right, we will start thinking, okay, there is weakness entering the market. Okay, so weakness appears on up bars. Now the next bar that we got was a down bar, which confirmed that there is weakness. Okay, so with this widespread up bar, we got supply coming in. Okay, and the next bar was down, which confirmed that. Now the market's not going to fall straight away. Okay, the professional money are starting to build a campaign here. Okay, so you'll more likely see prices get pushed up, all right, but they won't go too far up, and that's just to basically get the retail traders on board, get them to go along, because we've got the professional money. They want to start offloading their holdings. Okay, so they will create a level of activity, all right, to entice the retail traders to go long, and that's what they've done. They've marked the price up, and as you can see here, as price is moving up, we see the volume is decreasing. Okay, and once it reaches these highs here, we start to get signs of weakness. Right? We get no demand, we get up thrusts. Okay, and we get no demand once again. Okay, so, and we can see here, folks, with this no demand, you can see, look how low the volume is. It's pretty much nothing. Nothing is there. So with that signal, at that point in time, then there's not likely going to be a up move. Okay, there's no demand to drive the market up. And look at where the bars are closing. All right, they mark the price up and they close on the low. Mark the price up and close on the low. So that is weakness. That is not strength. Okay, so we've seen the market get pushed down. Okay, and then we get a test after shakeout. Now that sort of signal is a bullish signal. Okay, so you would expect price to push up once again, and they'll mark it again. They'll mark the price up, enticing further traders to go long. Okay, so they've marked the price up. A test after shakeout is a bullish signal. So it was confirmed, okay, and they've pushed the price up once again. Now we get to this high here. We get no demand, sign of weakness 28, no demand, and then the next bar we get a bar which basically engulfs the previous bar. Now I call that a 2-bar reversal. Okay, so we had a up bar, and immediately after it we get a down bar which basically closes towards the low of the previous bar, and it's basically a 2-bar reversal. Okay, so that is a sign of weakness. Okay, so we see prices get pushed down, they mark it up again, and another 2-bar reversal here as well. Okay, further sign of weakness. So there's not much strength in this pair. Okay, every time they try and mark it up, they slam it back down. Okay, and then we see finally the price of the Aussie just fall away. Okay, now look at where it goes down to. It goes down towards the low of this ultra high volume bar. Okay, so when you see a Yao Ming bar, a ultra high volume bar like this, you would expect it, all right, to be tested. Okay, now this bar here, I've placed a trigger line on the low of that bar. Why did I do that? Well, what I'm waiting for, because this is weakness, I'm waiting for price to break down beneath this level. And once it does, then I start to, watch out for any signs of weakness below that level. Okay, so that's my trigger point. Okay, so I need price to break beneath that level, and then I'll look for signs of weakness to take short trades. Okay, so once price has reached that level, we saw price, just move sideways. All right, they've tested. So these are, test bars, test. All right, testing. They always test this level. All right. So what the professionals do, they want to get in at a better price to short the market. So what they normally do is mark the price up, which is occurred here. They mark the price up. All right, we get supply coming in, okay, and then they drive the price down. Okay, so this the retail traders, if they saw this sort of move, which broken out of this range that it's been, then they'll most likely enter this trade thinking, hey, it's moving up, all right? So let's see if we can get a profitable trade, and then straight away they just slam it back down. And again, they test, all right? We got strength coming in at this level here, and once again the prices get marked up slightly and pushed back down once again. Now, we've got this bar here, which is a very important bar because it's actually broken through this support level. Now, I would call this a trap up move. Okay, so they've broken beneath the support, all right, finally broken out of this trading range, and now we're starting to look much, much weaker. Okay, so and it's also broken beneath our trigger point, which is at 74.63. Okay, so we've broken underneath that level, and now we've started to move sideways. We've given some signs of strength, no supply, so we're starting to see some signs of strength, but now we're starting to see weakness enter the market as well. Okay, so here we could possibly have a trading opportunity, all right, to go short. If we get a confirmation of this weakness, then it's a good possibility to go short on this trade. So where is it likely to go? Okay, so if I bring up the bigger time frame, let's move to the 1 hour, and we can clearly see the weakness that has, entered this currency pair. All right, so here's our weakness. They go back up towards the previous highs and they test those levels. We get a trap up move. Okay, a trap up move is a sign of weakness. All right, so they mark the price down back towards our trigger point. We get another sign of weakness here, a 2-bar reversal. Okay, which is weak. And then we get a no demand. Okay, so, and now here's the breakdown. Here's the breakdown here. So where are we likely to go? All right, so let's bring up the daily. So as you can see here, we've been in this distribution channel, right, since March. Okay, so it's broken out of this distribution channel. Right, it's given us a upthrust, and now we've seen it basically a 2-bar reversal here, because this bar here is basically engulfed the previous bar, not fully, but certainly over 3/4 of that bar. So that is weakness. So I would expect for price to go back down into this channel. Okay, so let's see. We want to get a sign of weakness below our trigger, which we do have on the 30-minute. Okay, we don't have a sign of weakness yet on the 4-hour. On the 1-hour, we could potentially see one coming up. Okay, so we've got very low volume here. So this potentially could be a upthrust. So let's see what happens over the next 15 minutes. See if that pulls itself down. Okay, so we could see weakness here. Because we've seen it break this area of support, and now they're starting to build their next campaign for lower prices. Now, be wary of areas of strength. Okay, so we've seen this level here. All right, so we're likely to come down to test. If we break beneath this level here, okay, then we're likely to move down towards the 74 cents level. Okay, back towards areas of strength, or back towards this low here. So I'll just mark that, because that's another ultra high volume area. So yeah, around about the 74 cents level, that's where we could see it go down to if we continue to see weakness. Okay, now if we don't see weakness, then we're likely to see a retest of these highs. Okay, but I'm favoring shorts at the moment because of weakness that is in the background. Okay, so if you got any further questions, folks, send me through an email to info@superchargewyckoffvsa.com. Have a great day, and I wish you consistent profits. Bye for now.